The 18th of September 2009. Hope everyone is doing magnificent, but it's the 19th if you're watching it on Saturday, the 19th. And in this video, what I'm going to be doing is talking over some economic issues. I'll be talking about, start off with the Treasury, then gold, the IMF, the stock market, the Federal Reserve, and Ron Paul's book, and then unemployment. So that will be the order for this video. We're going to start off. The Treasury is creating more money. Just what we need is a bunch more billions of dollars to increase the debt. This doesn't solve the problem, of course, because if it would, then the problem should have been solved a long time ago by just printing out a lot of money. I know some very good artists who can actually write big numbers down, so I know it's possible. And I even check my computer. I can put in digits of quadrillions. So, I mean, there's no reason why we can't print up enough money and fix the problem. Actually, there is, which is what a lot of people have been trying to explain on here, and I think more people are waking up to the reality. So that is a very, very good thing. Switching over now to gold. 10 straight days for gold of being $997 or higher. 6 straight days it has closed over 1,000. We still haven't taken out the 1029 highs yet. We are still a little bit away from the highs in Canada, most likely definitely in Europe also, and anyone else whose dollar goes reverse with the American, that we're still away from the March highs that we had when gold was 1,000 in the United States, when their dollar was stronger than it is today. As far as support and resistance is for gold, I've been mentioning on the resistance point of view that 1,000 is a big level, yes, and that's why it's been productive of what it's been able to do the last couple of weeks. But resistance is in the area of 1010 to 1029, and we have been really playing around with that level for quite a while. If we do fall back, GLD at 97.75 is some key support, which is around 980-ish on the spot price of gold. However, the IMF may be selling gold. It says that they are actually. 6:16 p.m. this article came out on the Friday. IMF may sell gold to provide low interest loans to poor countries and shore up its financials. May sell it over an X period of time, which means over so many months, I guess. And China, India, and Russia shown that they have the most interest right now. They say on this article that the IMF wants to sell 1/8 or 12.5% of their gold, or 13 million ounces. Silver right now, $17 an ounce. And if gold goes down because the IMF's selling, don't be surprised if they do the same thing with the silver. I'm obviously for gold to have its breakout, for the dollar to have its big fall. Something has got to happen. It's most likely going to be revolutionary. It's going to be one of those set-up days, if you will. Either one of those two are the only things I can think of right now to elect a big problem. And if the IMF sells gold, and we see gold back below 900, and heavens forbid, even 800, then maybe that could create a spark, because only so many of the bulls of gold and people who have been supporting real assets are going to take it for so long, obviously. The Dow closed at 98.20 today, which means that it's only 2% away from that big psychological 10,000 number. I'm not going to say if we're going to find resistance there or not, because quite frankly, I'm even surprised we've gotten up this high. However, a lot of the times I look at the stock market, inflation, it's fiat money. The stock market is nothing but an inflationary measure, in my opinion. If we have this big inflation that they're talking about, then most likely we're not going to see Dow 3,000, we'll see Dow 30,000 or something, and maybe even higher than that, depending on how out of control inflation gets. If, of course, it happens. If those people say that inflation does not happen and the prices don't skyrocket, then the stock market has to crash, basically, in my opinion. So either or happens, or both. Okay, what do we got? Yeah, people are doing well with the Dow Jones being at 98.20 because their 401ks are worth a lot more than they were in March and so many other times in the last 9-10 months. However, It's basically like playing the roulette wheel and hoping that your piece of paper code is going to do magnificent. It's unfortunate in my opinion. And a lot of times when the stock markets go a lot higher, have all these extra legs, to me the bigger they are, the harder they fall. Meaning if it would have topped at 9,000, the fall may not be as bad if it's at 10,000 and worse at 12 and so on. Ron Paul recently had his book on CNBC. He had on Thursday a poll. 89% of CNBC voters said yes to abolishing the Fed, and that's quite remarkable. Obviously, those whom are Ron Paul supporters of the Constitution, usually support Ron Paul. If they see that ad, they're going to click it, which is what I've come to the conclusion of why it was so high, because I was hoping to see 50%. So it seems to me that people are waking up, and that's a very, very good issue. And there's some truth on CNBC. I was saying yesterday how back in June, the start of June, they said the real unemployment rate was 18% on a graph. No, they didn't say it, but they showed it. So that to me is quite remarkable how they will give you a shed of truth on there. I seen an article on there today saying how there could be some problems, and I'm thinking, you know what? A lot of times they say everything is peachy, rosy, fine, and there's going to be a great recovery. Then they say this, and I said that in a previous video, that they just can't make up their mind. I mean, sometimes they'll say this, then they'll say that. It's exactly what they are. So it seems as if they want to mix truth with lies, and you will find some truth on there if you can find it or distinguish it to be truth. Moving on now. Yeah, as far as 89% of the Fed wanting to be abolished, the way I look at that as, it's almost like the Who Wants to Be a Millionaire audience. Usually they're right, so I think the same thing can be said here too. And as far as the revolution is concerned, I've seen a lot of improvements on this, a lot more people speaking out. That's magnificent, and expect it to even go to a higher surge. And don't be surprised if there's an event that just really triggers it to go higher. Maybe the swine flu is going to create this revolution, as obviously it seems as if something's on the agenda for that. 42 states say they have that they're losing jobs, and that they're expecting the unemployment to peak over 10% next year, based on their numbers, of course. I usually just rule of thumb, just double whatever they say. If they say it's 10%, it's 20. If they say it's 25, then it's 50, something like that. Michigan, 15.2% is theirs on their numbers. Nevada's at second at 13.2. Then Rhode Island at 12.8. California and Oregon are both at 12, and there are 9 more that are 10% and higher, meaning 14 of the 50 states have unemployment in the double-digit figures. And the key thing is a lot of the jobs lost were in 2008, which means that a lot of unemployment benefits are going to be running out, which really does help the unemployment number. So there's a benefit for the people losing out on the unemployment benefits, is that the media can actually pretend that the economy is fine by saying the numbers are better. Of course, sarcasm has probably been detected there. But, however, nonetheless, the way I see it is this, with unemployment benefits being run out, this leaves either 2 options. One, you got to extend it, and if that's the case, that becomes creation of the money supply, which can result in inflation. Or you don't extend it, extend their benefit or their unemployment benefit plan. And if that's the case, then, as Gerald Celente says, more people are going to lose it. And when they got nothing left to lose, boom. And that would also help on the revolution also. But, oh man, I look at this and I think jobless recovery. I think it's possible, but not immediate. Might take 5 years, might take 10 years. Not 5 or 10 months, as they like to say. So, Ben Bernanke, you say the recession is over. I call BS. Take care, everyone.